sell to rent. And today we're going to be showing you one of the most important topics when selling a house. Understanding liens, your options, and strategies that may allow you to sell and stay as a renter. So this is to simplify a complicated situation. We'll discuss what liens are, how they affect a property, what happens if they are ignored, and what options may be available to resolve them while still protecting as much equity as possible. Why acting early really matters. Foreclosure activity has increased in many markets. That's what we've been noticing. So carrying cost, interest, penalties, and legal fees can continue to grow. So the longer the homeowner waits, the fewer options may be available. So equity is often easiest to protect before a forced sale, and the exact foreclosure timeline depends heavily on the state and type of lien. But the principle is still the same. The earlier you address the issue, the more control and options you typically have. Okay, so what is a lien? It's basically a legal claim against your property that may be attached as a security for an unpaid obligation. A lien can cloud the title, complicate the sale, or refinance. It can accrue interest, penalties, or legal fees, and potentially lead to foreclosure, depending on the lien and applicable law. So, a lien doesn't necessarily mean you immediately lose your home, but it does mean that there is a claim that generally needs to be addressed before or during the sale. Common types of liens. Number one, property tax liens, unpaid property taxes, penalties, and interest. Number two is HOA condo liens, unpaid dues, assessments, and other authorized charges. Mechanics liens, claims related to unpaid construction, repair, or improvement work. And lastly, mortgages and HELOCs and junior liens. So primary mortgages, secondary mortgages, home equity loans, and lines of credit. So not all liens are treated the same. Their priority enforcement rights and payoff requirements can vary by state and by specific circumstances. This is basically how a debt can escalate from a missed payment to a potential forced sale. So you missed payments, you start getting notices and collection efforts, and then lien or legal action when applicable, and foreclosure proceedings, potential auction or forced sale. So the timeline is not identical for every homeowner or every lien. Some situations take months or years, while others can move much faster. The important thing is to understand where you are in the process. So, why traditional options may be difficult? So, option number one, if you're looking to pay cash, it requires available funds. If you're looking to refinance, you need enough equity, good credit score. You need a proof of income, and there's underwriting requirements. The property needs to be in certain condition in order to qualify. A traditional listing could be a good option, but timing, repairs, showings, and buyer financing can delay things and leave you with no time to actually stop the foreclosure. And then lastly, bankruptcy is one of the options, but it has significant and legal financial consequences. So structure sale and leaseback may provide another option if the property qualifies. Our approach isn't automatically like the best solution for everyone, but for the right homeowner and property, a structure sale can create another path. Going on to slide number 7, what makes a property investable? So investors are typically looking at property value and comparable sales. They're looking at location in neighborhood, property condition and repairs needed, existing liens and mortgage balances, market rent, insurance and property taxes, expected operating expenses, leaseback terms, potential return, and cap rate. So, can the property generate enough returns for an investor while still creating a workable outcome for the homeowner? Investors aren't simply looking at what the homeowner owes, they're evaluating the entire property and the financial performance of the. So, understanding the investor buy box. We work with all types of properties, mainly single family homes. We work in all 50 states. We can transact in all 50 states. We also work with condominiums and townhouses. Now, in order for your property to qualify, the criteria is lot size under 1 acre. Homes have to be built after 1900. Market value of the property needs to be under 1 million and have at least 30% of equity built in the property. If your property was maybe built before the 1900 but has been fully renovated in the last couple years, we can potentially still work with it. So to qualify for a leaseback, the property must fit within the real estate industry calls a buy box. So our internal process from the initial review to closing. So first we reach out, we do our initial intake, we gather all the information and find out why you are looking for this solution. Based on number two, based on the information you provided, we make the offer, our preliminary offer. So we give you the breakdown of the purchase price, the mortgage balance that needs to be paid off, the rent amount, and your net proceeds, what you will be walking away with after all fees are applied. Now, you decide, we never pressure you. We'll just put the offer on the table and you decide if this option is the right fit for your situation. We're not looking to do a forced sale here. We want to make sure that you are fully comfortable moving forward and that this option brings everything that you're looking for. We can close within 30 days or less and stop the foreclosure, allow you to stay as a renter and stay put and not disrupt your family. So you stay in your house under a lease contract. Ownership does transfer. So this is not a loan or finance or refinance. Basically, you are offsetting your ownership responsibilities. Slide number 9. So, is this the right fit for you? It is the right fit if you are looking to stay in the property. You need a predictable outcome. You need to move fast. You're looking for speed. You have enough equity in the property, at least 30%, and you can manage the rent going forward. So if the rent is, doubling your mortgage payments, this could be put you in a tough situation. But as long as you are comfortable with the rent, it is based on market average rent. So if you are okay with that, this could be a great fit. And the home has to be less than 1 acre. We cannot work with homes that are over 1 acre, maybe a bit over 1 acre, but most investors don't want to buy into properties larger than 1 acre. So it may not be a good fit if you are looking to maximize price above all, if you plan to move out anyway and right away. And, if you can qualify for a loan modification, that might be the best option, knowing that, you are still the homeowner. So, next slide. These are some of the most frequently asked questions. What do I do now to start the process? So, first of all, we would need to gather all of your payoff letters from the mortgage company, find out the balances from any liens that are attached to the property. Also, request the sell dates in case you already have a sell date scheduled or an auction date. There needs to be at least 30 days in time in order for us to stop the foreclosure or request an extension. Now, we can close pretty fast in many cases, as fast as 20 to 30 days. But sometimes, if we don't start the process soon enough, we might not be able to get the extension needed or find a buyer on time to actually get to closing and stop the foreclosure. You can stay for as long as you need until you're ready to make your next move. We can customize the leaseback agreements anywhere from 12, 24 months, with the option to keep extending after the 24th month. But we've noticed that that's like our sweet spot with the investors. Once they see a leaseback like 5 years, it's going to be a little more challenging for us to find an investor right away, but that's why we have the option to extend after the second year. Do I have to cover any cost as a renter? Not at all. The new owner, you offset all of your ownership responsibilities. You are basically only responsible to pay rent on the monthly basis. Any repairs, any maintenance that needs to be done to the property, it's now the new landlord's responsibility. So another question is, why is your offer less than what I see in Zillow? So Zillow is just like a guideline for us to determine the price of the property, but there are a few things that we look into before we even price a property. So this offer is as is, so we're accounting any repairs, anything that needs to be done to the property. We are also accounting the market behavior in the last 6 months and looking at comparable sales. So we want to make sure that we are comparing apples to apples. That's why it is important for us to receive photos on our initial consultation to be able to determine a more accurate price. So, like I said, we take into consideration condition of the property and investors buy the property as is, so you don't have to worry about any repairs moving forward to try to get the most out of the price. Next slide. So here's Marcus's story. He had a lien for a mechanic's lien. He did not know this could be attached to his home without a mortgage default, and a traditional sale wasn't the best alternative for him because of the time that he needed to spend on the market. So he came to sell to rent, and within 12 days, we gave him a cash offer. We were able to pre-assign the deal and clear all the liens and everything at closing. And now is leasing back the property and was able to not disrupt his family's life and stay as a renter. Another story, one of my recent customers out of Minnesota, he was getting foreclosed on for a HOA lien. So we've noticed that HOAs and homeowners associations have started to foreclose on properties just for a few $1,000s. His debt amount was about 8 to 9K, and he came to us with like 3 weeks before the sale date. It was a great market, so we were able to lock in a buyer within the first 2 weeks and get to closing and get the extension needed for the sale to get accomplished. So these are just some of the experiences that we like to share with people. These are real people, and know that you do have other alternatives. So if you're not sure if this is for you, go ahead and give us a call. We can run your specific numbers. You ask every question you have. There's no commitment whatsoever. We're here to give you all the education needed for you to make your best decision. It should take 15 to 20 minutes. That can change a whole perspective and give you another solution or a different path. You can go to selltorent.com to book an appointment and get your offer, and we will call you within the next 24 hours. You can book an appointment with us through our website, and you'll be connected to one of our seller managers, or you can call us at 800-954-6373. Our whole team will be ready for you. Thank you, everyone, for your time today. I really hope that this was helpful and gives you some other options that are out there available. Please feel free to reach out to us. We're here to help.